half an hour away from the opens in Hong Kong, Shenzhen, and Shanghai. You're watching The China Show. I'm Yvonne with Annabelle Droulers.
Our top stories: Asian stocks surged to a record, boosted by solid Wall Street earnings and easing trade fears.
President Trump says he expects to strike a deal with China, outlining issues to be discussed next week at a meeting with Xi Jinping.
Critical minerals will be part of the talks as the US seeks to reduce its reliance on Beijing by striking a deal with Australia. Well, the markets are moving to the upside this morning. Does really follow what we had on Wall Street overnight, because we saw solid gains for the S&P 500, also the NASDAQ. So it seems to be that theme we had carrying across from the weekend. Easing trade fears, perhaps, even though you saw President Trump again reiterating that there will be further tariffs if there isn't a trade deal by November 1. But still, investors liking any signs of de-escalation they're seeing between Washington and Beijing. The other part of the picture as well is definitely corporate earnings, because out of the 85% of companies, or 85% of the companies that have reported so far have posted earnings beats, this was a very, very critical earnings season, really giving indications on the health of the US economy, the health of the US consumer as well. So that again plays into the picture today. Again, upside here across the screen. Some of the individual themes we're watching, where you can see the Nikkei there advancing more than 1% or 1.2% in the green today. We have had reports locally that Japan's Ishiba cabinet has resigned en masse, so it does mark an end to the administration that took office just over a year ago. But again, investors liking this signs that we're getting a little bit more political clarity in Japan as well. In terms of what else we're tracking, the story around Apple is going to be very closely watched today. You're seeing the Taiwan Stock Exchange has come online 0.6% to the upside, but Honhai here you can see posting some solid gains in the session so far. This is actually a fresh record high for the stock this morning. It is, of course, we're seeing stronger sales coming through for Apple's latest iPhone range, and Apple itself just posted its first fresh record high of the year. But let's shift on, take a look at the other big story in the session today, and this relates to what's happening between Australia and also the US, because President or Prime Minister Anthony Albanese has travelled to meet with President Trump in the US, and they've signed a deal essentially for Australia to be boosting its supply of critical rare earth minerals to the US. Off the back of that, we've seen, again, some upside in some of these names this morning. What else we're tracking, of course, is the outlook for the China Open today, and we're sort of seeing, yes, a bit more positivity here. It is an interesting story, though, in China, because at the same time that you've seen that optimism around AI kind of come down a little bit, it has been that playing to dividends as well, and that does also tell you investors might still be a little bit wary about where that trade relationship goes.
Yeah, I mean, given what we saw, right? But, this rotation into some of the value plays, that has been something that we've been tracking for the last few sessions as well. But we'll see. I mean, the tech rebound we saw yesterday was quite enormous as well. So certainly that's one thing to watch here. You take a look at when it comes to what we heard from the president. Trump did mention in this interview about specific items, I think, that he wants to discuss with Xi Jinping. Everything from rare earths, fentanyl, soybeans, and Taiwan as the top issues that he wants to deal with when it comes to Beijing. And he's expressing optimism about a trade deal coming out of his meeting next week with when he talks about these impending meeting with Xi Jinping.
I expect we'll probably work out a very fair deal with President Xi of China. So most of you will be with us. It's going to be very exciting. And I think we're going to work out something that's good for both countries.
And so, the chances of a trade deal or some kind of big grand bargain is certainly one thing that we're tracking. I think you take a look at some of the betting markets like Polymarket, I think those odds have come down just a little bit, just given, what he's listed are pretty controversial topics and sensitive topics too.
Yeah, I think fentanyl is sort of seen as one of the ways that you could strike a bargain. Of course, the push from the US is that they want to limit some of the key chemicals that are used, for instance, in the manufacturing of fentanyl. China, though, will say this is an issue that the US also needs to deal with domestically, but fentanyl kind of stands out. Soybeans, of course, this is a big pressure point because China was buying up until last year, but they've completely pulled back this year. And of course, soybean farmers in the US are also affected by the US government shutdown. They're stopped from getting aid right now.
Right. And I think for now, at least, you are starting to hear that at least both sides really are willing to talk, right? I think that's enough for markets where you start to see, records really hit, right? Whether it was Korea, whether it was Japan, even India is getting close to those near record highs here. Taiwan, just coming online back again, also hit a record. So this everything rally seems to have a bit more momentum. And now people are saying, look, maybe this is the start of that sort of Santa Claus rally now for risk assets.
Yeah, and just also that point around rare earths as well to note, this is a big one because is the US going to be getting together with allies around the world essentially to push back on China's efforts to restrict the supply? But on that point, Washington has now signed an agreement with Australia to boost access to critical minerals and rare earths. As we said, the US is looking to reduce its reliance on Chinese supplies. Bloomberg's Paul Allen is with us. So Paul, it's a very significant deal, at least from the Australian perspective, but tell us exactly what it entails.
Yeah, significant from the US perspective as well, because as you're discussing there, it really does help the US break this chokehold that China has on global rare earth supply. So a lot of speculation about what this deal might look like going into this meeting. Well, now we have the detail. $1 billion of initial spending over the first 6 months, and that will build to $8.5 billion with a number of projects in the pipeline. Now, there are two projects that already have financial commitments. One is the gallium recovery project in Western Australia. The Pentagon and Japan are both helping fund that as well, and that would provide 10% of global gallium supply, and this is used in semiconductors. The other is the Arafura Nolans project in the Northern Territory of Australia. This is the mining and processing of neodymium and praseodymium. Both of these metals are used in the powerful magnets that we often talk about that are required for electric vehicles, military applications as well. Now, if you bought Arafura shares at the start of the year, well done you. They're up about 400% year to date and got another pop today off the back of this announcement. And President Trump, when he was signing this agreement, says in 1 year we'll have so much critical minerals we won't know what to do with them. So you can debate the optimism of that statement, but certainly the rhetoric behind it says a lot about the intent here.
And what about the security sort of alliances, right? President Trump also reaffirmed support for the AUKUS defense pact. What did he say about that?
Yeah, this has come as a huge relief to Australia because the Pentagon had been conducting a review into the AUKUS Pact, and of course the Trump administration having a reputation for being unpredictable, nobody really knew what was going to happen here, and Australia is relying on this to give it the next generation of submarines when its current fleet is retired. So President Trump expressing commitment to that deal. The US Secretary of the Navy said, look, that review's just to deal with ambiguities and improve the framework, but the President saying that this is full steam ahead. He said it was going too slowly, and he praised the investments made by Australia so far. So all in all, looks like a very successful visit for Prime Minister Albanese to Washington, and President Trump also praising the Prime Minister, calling him a great PM.
That was Bloomberg's Paul Allen there in Sydney, and we're going to have more on Australia's economy in the coming hours as well, because Treasurer Jim Chalmers will be joining Insight with Haslinder Amin. That's live at 11:30 a.m. in Hong Kong, 2:30 p.m. if you're watching from Sydney.
All right, let's bring in Winnie Wu now, head of APAC equity strategy at BofA Securities. She joins us here. Winnie, it's good to see you. I mean, you're talking about Chinese markets that seem to be getting a bit more, I guess, of a mojo, given that the trade relations seem to be cooling down. It looks like this meeting with Trump and Xi are going to be underway in South Korea. Can we continue to be risk on?
So our advice has been stay risk on till end of October for these two major events, right, or catalysts. One is this week's fourth plenum together with China's 15th five-year planning. And then second, apparently, is the APEC meeting and the potential U.S.-China discussion on trade truce or some sort of deal. Until then, we can stay risk on, and after that, market probably want to reevaluate. Yeah.
What sort of odds then are you ascribing to some sort of trade deal being struck then at APEC, and how significant is that going to be for sentiment as well?
Yeah, I think currently market base case is President Xi and Trump will meet, that the 100% additional tariff will not be imposed. I don't think there's very high expectation on a grand deal, but at least sort of maintain the engagement, maintain the negotiation, and maintain status kind of the status quo. Now, Having said that, that's very much what's priced in, right? Yeah. Interestingly, a week ago when the China escalation first came out that weekend, all the requests I got from investors were time to bottom fish, what to buy, right? So when this round we saw the escalation of trade tension, people were looking into the April playbook and thinking, hey, this is buying on the dip opportunity. But as a result, market actually didn't correct much, which means that currently market are not overly worried about sort of decoupling or massive escalation. But having said that, despite the near-term negotiations, there are some increasing concern about the long-term decoupling. Yeah. That with China's localization, domestic development of chips, semiconductors, with U.S. and ally building up the rare earths, critical mineral supply chains, it is positioned for a more potential long-term decoupling. Yeah.
Everyone's talking about the next catalyst as the plenum, as you mentioned. Everything from AI, anti-involution, consumption. What do you think is going to be driving markets the most, and what do you want to hear?
Yeah. I think currently market focus are probably, in terms of the economic policies, are probably mainly two things. One is to see if there are any big direction moves to boost the consumption as percentage of the economy in terms of the mix and the growth drivers, right? And what are the specific policies to release all these excess household savings, right? So along those lines, people are looking at the reform of the hukou residential rights system, potentially providing better social security support for the rural household so that the excess savings can be released. On the other side is also along the lines of, China's strategy of these new productive forces, essentially the advanced manufacturing, AI technology. Is China going to double down, right? It seems to be making great progresses. So are there going to be more investment, capex, along the lines of like AI data centers, power grid, power storage? So that's also something people are looking at. Anti-involution, I think people are watching if there's any specific development, because so far it seems that the policy is very much market-driven, industry work it out. It's a lot of more, window guidance rather than hard target. So even though stock market has responded very positively, investor conviction remains relatively low in terms of whether that's really enough to drive the capacity reduction and earnings turnaround.
So then how exactly are you positioning, given you've got so many different directions it can take?
Yeah. From recent discussion with investor, what we found is the emerging market long-only investor have already positioned for China, right?
Everyone already overweight.
Already, yeah. Already. So in both Europe, Singapore, Hong Kong, I think the EM investors are either neutral or overweight on China already. Even the long-term bears, some of the investors we've known for a long time, right? Always very skeptical on China. They said, I'm neutral on China. Even though I still don't like the latest economic numbers, I'm neutral already. So to some extent, the pain trade already happened. And I think that's partly because within EM universe, China and India are the two largest components. And given India's performance against China over the past 12-15 months, investors have to make that adjustment. So the pain trade kind of happened already. But having said that, many global funds, right, the big U.S. global fund, they are still have very low position on China, whether it's the general global fund or some of the global industry sector special fund. So like, this time in Europe, we met with global financial specialists, some of the global tech specialists. They very much missed the China rally, partly because U.S. was still doing very well. Europe this year did very well as well. So I think the next wave, if there's next wave of incremental buying, they need to come from the global long-only guys.
Okay, Winnie, we'll have more with Winnie Wu there, head of APAC equity strategist of BofA Securities. And still ahead, we're going to speak with China Great Wall Securities as well, joining us with their insights when it comes to CATL's third quarter results. The battery maker reported a 41% rise in profit. Yun Mei joins us here in just a few moments. And we are counting down the open of trade in Shanghai, Shenzhen, and Hong Kong. I believe it's still at T3 here in the city. Kindergartens has been suspended here this morning, but futures are pointing up. Not much you're seeing out there. Clear skies for now. This is the China Show.
Just under 15 minutes away from the open in mainland China, Hong Kong. You're seeing futures here pointing to some further gains for Chinese equity markets today. The big story, though, is also in the tech space today, because we had Apple reaching a fresh record high on the last session. Strong iPhone sales, it seems, so we're definitely seeing better results so far for the latest iPhone compared to a year ago, and that's also playing into the tech-heavy indexes like Taiwan, the Kospi, for instance, but Hon Hai at a fresh record high.
Yeah, continue to see, right? This everything goes right now. I mean, gold prices went back to all-time highs here as well. So
the everything rally.
The other big rally that we've been talking about, really that correlation, that negative correlation between the dollar even to stocks has really kind of just faded for the last few weeks. And so taking a look when it comes to your renminbi, though, seeing a little bit of strength here. We're at 712, just sub 712 here after another strong fixing from the PBOC here today. Still with us, though, is Winnie Wu, head of APAC equity strategy at BofA Securities. You talk about leadership, right? We mentioned materials, healthcare, communication services. That were some of the outperformers in the last month. But there has been this kind of market rotation into the value sector. Do you think that can last?
Yeah, I think for the past week or so, since the re-escalation of the U.S.-China tension, I've got more inquiries about buying banks. I've got more questions about consumer stocks, because the fact is, with this year's rally, a lot of investors are sitting on very good profit, right? Some of the tech, mid-small cap stocks have done exceptionally well, and it's close to year end, so people are unwilling to take excessive risk, at this close to the year end. So we see some people start to trimming the stocks that they're already done very well and rotating into more of the defensive sectors. So in our fourth quarter strategy, we also moved the e-commerce sector out of the top 10 preferred list. We would say that, potentially consider adding some of the financials, dividend yield, and in our marketing with the European and the Singapore long-only investor, they are more inclined to add the traditional consumption stocks as an incremental position, partly because those have been lag, and it's not crowded, the valuation's cheap, and if the stock market rally is creating any positive wealth effect into driving consumption recovery, then hopefully it will help the earnings of these traditional consumption stocks. Also, the other hope is that, with the 15th five-year plan, if government come up with more policy to support consumption, these stocks will benefit as well.
That all makes sense, and I think we were talking in our story at Bloomberg, you've got sort of that shift into defensive on the trade tensions, and also that seasonality factor you were mentioning as well. It can shift, though, quickly, sentiment. So do you see any rotation back into AI stocks or that tech story again?
Yeah, I think within the region, people generally see, or even among global investors, people generally see AI as a multi-year, long-term story. So within the region this year, the outperforming sectors or market like Japan, Korea, China, they generally have a strong AI story, right? And people expect the AI capex cycle to continue having momentum over the next 5 years, and some of the related sector, whether it's like humanoid robotics, autonomous driving, defense, shipbuilding, people think those are multi-year trends. So, I think for the tech-related sector, they might have a short-term pullback, partly because they run too hard. Some of the valuation, especially for the Chinese AI stocks, have become very expensive. We're looking at like 300, 400 type of PE, the PE type of multiple for certain stocks. But I think these are areas people continue to doing more work on and looking for opportunities to buy on the dips.
Talk to me about anti-involution, because it was interesting in the data yesterday that industrial production was still quite robust despite these sort of campaign, but then you're seeing an investment really being weighed on anti-involution. How are you seeing that playing out in the equity market here so far, and where are you seeing the most sort of price action due to this sort of campaign?
Yeah. Interestingly, 10 years ago in 2015, when China talked about supply side reform, market reaction initially was very negative.
Yeah.
Because when you think about cutting capacity, cutting production, it would have negative impact in terms of production activities, investment, the jobs, and banking sector NPLs. So market actually dropped like 20-30% initially, and then have the big rebound as we see the pains being absorbed and we see PPI turning around. But this time around, I think partly because of the already low valuation of some of these like material-related stocks, and partly because of the general confidence on the economy, on the policy effectiveness, market kind of jumped the worriness phase and go directly into longing these stocks, which apparently is pricing in for expectations already now. And we are still concerned that yes, this momentum can continue, and people willing to believe that this will turn around, this will deliver, and people are watching the PPI numbers, corporate margins very closely. But I think if at this high valuation, fundamental doesn't catch up, then there's certainly the risk of pullback correction.
And when would you see that happening? We already have the economy, for instance, growing at the slowest pace in a year. So when does the reality kind of set in?
I think it's also compared to expectations. Compared to the previous expectation, I would say trade and economy are probably doing better than what people expected in April, May, right? Because back then, some economies were worrying about off the cliff type of deceleration in trade and GDP, which didn't happen.
Okay, holding up better than expected relative, as you said, it's all about what investors are thinking versus the reality. But that was Winnie Wu, the head of APAC equity strategy at BofA Securities, taking a look as well. We are 7 minutes away from the open in Hong Kong, mainland China this morning. And again, pointing to some upside here, going to be really watching that tech sector very closely today, given you had Apple hitting a fresh record high, but strong gains we're seeing as well for Taiwan and Korea so far this morning. We'll have more ahead. This is Bloomberg.
Some stocks to watch at the open here today. So CATL, obviously, there you go. We're up about 3% in the 8 shares here right now on the back of those pretty robust earnings that we got here as well. So that jump in third quarter profit. Obviously, we're focusing on really this overseas expansion efforts there as well with that stock. And we actually have seen that, when it comes to renewed trade tensions, it did weigh a little bit on the stock here today, but looks like right now we're getting a bit more of a recharge over the stock overall. And we're watching very closely here JL Mag Rare Earth. So some of these rare earth stocks, given this deal that seems to be set between the U.S. and Australia as well. But yes, also profit came out there, more than doubling year on year for the third quarter here. We're seeing the shares up about 0.9%. Trading debut here in Hong Kong today. We're talking about JST Group. They're talking about cloud services and the like. We're up about 24%. So a good first day of school for that one. Gold stocks as well. Still watching the miners, given we hit another record here once again when it comes to the precious metal. There you go. Shandong Gold up some 2.5%. And of course, the Apple suppliers, right? So you've been focusing on a little bit more on, the likes of Apple hitting an all-time high once again. There you go. You've seen that trickle effect here when it comes to some suppliers here. They're watching the China show. The Open is next. This is Bloomberg.
Welcome back. You're watching the China show this morning, counting down to the open of markets, and we're expecting some upside. So it does track what we had on Wall Street overnight, because we had optimism around signs of easing in the US-China trade relationship. US corporate earnings as well have been a really big factor, but it's not just US corporate earnings. Of course, names like CATL are going to be playing into sentiment in Hong Kong today.
Yeah, that jump in profit in the third quarter, and obviously when it came to the guidance, we'll say BI was saying that it looks pretty robust here as we count down to the rest of the year. And obviously there's a lot of focus on this overseas expansion plans as well, especially when it likes to Europe, and really how it's being dealing with the U.S. and China flare-up in tensions of late, right? So certainly that's one thing to watch when it comes to CATL. But yes, we are continuing to see an up arrow story when it comes to risk assets here in the region. You talk about Japan, you talk about Taiwan, you talk about Korea hitting records, India even, which has been the underperformer all year, also near their own records here as well. So certainly that's one thing to watch here, that this everything rally still has another day, it seems. The CSI 300, there you go. Onshore markets are doing quite well. We're up about 0.4% here. We're focusing on, there you go, CATL A shares. We're up about close to 2% here at the get-go, so certainly what's one to watch. The likes of Capricorn Tech, though, still focusing on the tech space, the chip space, I should say. We're just really flat when it comes to that stock in particular here. We flip the boards and talk a little bit more about what happened in Hong Kong yesterday. I mean, obviously it was this big rebound in tech after this kind of flare-up in tensions between the U.S. and China. Took a little bit of a step back here. Once again, we're hearing from President Trump in an interview talking about the issues he wants to talk to President Xi about, and it's everything from fentanyl, everything from soybeans, everything from Taiwan. Quite divisive sort of issues, right? So what does that lead in terms of whether we're going to get some sort of grand trade deal at the end of APEC in South Korea? So certainly that's one thing. But then again, markets are still quite optimistic, right? HS Tech, we're up 1.5% here right now. And you're seeing the likes of Alibaba, once again, up some 3%. We're inching close to around $167 here right now for the stock. Baidu as well. So the AI darlings need to be doing quite well. Xiaomi also doing pretty good here. Tencent up about 1% or so. So there you go. Tech is once again catching a bid here. We're seeing most sectors are mostly in the green here. And take a look at the strength of the currency as well. We're hovering around that 712 handle. But it was another fix here that was below that sort of 710 handle. So once again, you are seeing a bit of an anchoring of the currency from the PBOC here today. In terms of what to watch, of course, rare earths is certainly front and center here when you talk about this trade deal and this deal with the U.S. and Australia that was signed overnight as well. It obviously could be a good deal for Australia, but also as these both nations try to reduce, or at least the U.S. tries to reduce its reliance on China when it comes to the critical minerals. You are seeing some of these domestic plays here actually fall on the back of that news here. So you are seeing the likes of mid-metal rare earths and as well as China Northern rare earths are lower here this morning as well. Apple suppliers, that's interesting, right? Because we were talking about Apple, sort of the underperformer, a high-profile underperformer among the Mag 7, finally catching up here, and we hit all-time records here. So there was all this kind of talk about the iPhone 17, and this long-anticipated upgrade cycle seems to be underway here right now, Belle.
Yeah, I mean, it's been an interesting story for Apple because they were really perceived as being the laggards in the AI space, and that was what led to, as well, the underperformance of sales of iPhone 16. But we're speaking with a lot of different analysts, and they're saying that long-awaited upgrade cycle could actually be starting to bear fruit. So you've seen the Apple stock gaining around 50% from its year-to-date lows. Very exceptional one for that company. And again, you can see it playing out here today because we've got names like Honhai, for instance. It's already hitting a fresh record high, but some of its suppliers in China doing very well today as well.
They've actually been rallying quite a bit even before this, what happened with Apple overnight. So certainly they've been kind of foreseeing it in some ways, given some of the research that we've seen. Sales in U.S. and China have been quite robust around the iPhone 17, I think the first 10 days of sales. So certainly that sends more optimistic signs around that sort of series. CATL, that's the one to watch here today. So obviously they've been talking about this 41% jump in profit here as they take a look at this overseas push. That continues as well, of course, as this competition in China intensifies here. So certainly we'll see, obviously, with the mine suspension and what could happen there. That has been a big mover in terms of lithium prices. Do we expect CATL to get that mining permit? When do things actually start to operate of that mine? That certainly is going to be a lot of questions we can ask our next guest, Belle.
Yeah, that's right. Let's actually get to our next guest. That's Yun Mei, EV and lithium-ion battery analyst at China Great Wall Securities. So we just saw there that maybe a bit of divergence between the eight shares. But overall, we're seeing both in the green. We can get to that divergence in a moment. What do you make of those results that we got, and what stood out to you in particular?
As we can see now, the AH premium, the distance between the price is narrowing because we have to face different valuation models for the HK investors. They are facing in amongst the cornerstone investors. They can go freely with their money in 1 month. But for the A share investors, they just got some good news for the quarterly earnings, and plus that, the company just finished the minimum amount of the repurchase, and the maximum is $18 billion RMB. So there is another 40 billion RMB to go. So we can say there is a floor price for the A share market for the CATL. But on the contrary, the HK investors are facing the cornerstone investors, and some institutional investors we can see from the price curve recently, they may took the profit already, and they want to avoid the risk when 19th November the cornerstones they will not stay too much on the market. And,
I'm looking at the H. I mean, the stock has mostly doubled, right, of late. If PE of 34 times in the H-share market, do you think that's still cheap?
I think for me, I'm an industry analyst. I always think CATL should gain more. And like the IPO day, I just communicated with your colleague that I think CATL is a investing stock, not a trading stock. But I have to say, and this month, we have a trading point, a good window for the HK investors to trade the CATL stocks at the moment, and we can see today the price. Actually, the HK price is still better than A-share. I guess the earnings driving the upward trend again.
Sure.
Looking at it as an investment stock, I guess also means looking at the long-term story, of course, for the company. And what does that mean to you now? Because I think there's a big question mark. They need that global expansion, but you haven't seen really huge EV sales there either. How important is AI for the company?
It's a very good question. AI is booming, and we should say that not all the investors can get their money back through AI investment because it's like many startups. But all the AIDC, the AI data center, they need energy storage facilities, so that the CATL may be the best shelf sellers in the world, so they can benefit the most from this trend. And they have Germany factory, and the Spain factory is coming, and the Indonesia factory is coming as well. So we should also notice that there are new regulation policies from China to regulate the some making machines and rough materials related to the lithium battery industry. And the companies who has more overseas factories can greatly benefit from that policy.
Yeah, I mean, before it used to be about tracking EV demand, and now you're hearing this whole buzzword, right, of energy storage, and it was clearly becoming a way to kind of drive the stock. In terms of earnings, I mean, this whole ESS demand, how do you see that boosting the bottom line now for CATL?
It's worth noting that the inventory is very high at the moment, and at the same time the inventory day is historically low. And when we look at the two figures together, which proves that the order is coming and the order is real, so that's why they achieve historically high net profit. And the net profit for the energy storage battery, the gross margin. The gross margin part for the EV is lower than the energy storage battery at the moment. But in the past, like you said, when EV drives the demand, it's the different story.
Just on that EV demand, do we need to be concerned that China has lost some market, or CATL has lost some market share in China?
Definitely. And I think it's not a bad thing, because you see the price war. We see the price war for like almost 3 years. So cheap, the car is so cheap, and the battery makes the real problem for many battery companies to survive. And nowadays we have the anti-involution policy at the same time. So in the coming days, I'm very optimistic to see CATL to get back the market share, because when the bottom line is set, the other battery companies will not be allowed to sell cheap cars again. And I think the regulation, the overseas regulation policy for the lithium battery industry is not like the rare earths. So many clients ask me if the lithium battery will use as a ACE card like the rare earth for the U.S.-China trade negotiation.
Oh, interesting. Like a negotiating tool.
Like negotiating tool. But I don't think so, because it's like they control more about the machine which can make the lithium-ion battery instead of the final products like the rare earths. And the industrial barrier for lithium-ion battery is not as high as the rare earths. Many countries can make lithium-ion batteries, but they just can't make it profitable products. And this is the strongest part for CATL.
Yeah.
They can massively produce high-quality products worldwide with a reasonable price, and they get themselves a satisfying net profit. Yeah.
I hear what you're saying. It's interesting, though, when it comes to this stock, though. I mean, there's always been concern, particularly from foreign investors, about geopolitical tensions, the potential for restrictions on Chinese technology in the U.S. and Europe as well. Can overseas expansion be a key earnings driver then in the future over what we're seeing domestically in China as competition there intensifies?
I think you are totally right, because I did some little field research with all the lithium-ion batteries, mainly in China, and they told me at least they needed to spend 3 weeks to file the new document. And if you have enough overseas factories, you don't have to do that. And so for the regulation part, the production and the selling process, they were delayed by the regulatory policy in reality. So that's a very strong drive for international buyers to buy CATL, because they just have a very good German factory. No, that such a long time, 3 weeks at least.
But I think to Yvonne's point there, do you need to be concerned about potential pushback from places where CATL is looking to expand? Because there is that risk that China is exporting its excess capacity, it's cutting into the industrial base in Europe in particular. Where do you see that political blowback happening, and how much of a concern is it?
I think it's very, very, it's a very good question, and I would like to compare a lithium battery to the solar PV. You know, back days, solar PV industry in China, they are seriously fight in Europe and in USA, just like you discussed. And nowadays, I think just the regulatory policy, to some extent, is an overseas version of the anti-involution, because the regulation policy, they want to control well the companies will sell their products, and who they will sell the products to, and what price. And it's a price floor. So I think one of the main reasons they want to give the regulatory policy on all those companies, because we can see within China, the lithium-ion battery companies are, except CATL, they sell their products very, very cheap during the last 2 years, and it's not a good thing. And the Chinese government do not want to say they do it again in Europe or US, and then we get fines, we get some bad influence again.
Last question. What is CATL's influence when it comes to the price of lithium? Right, we saw that mine suspension just a few weeks ago that was able to kind of push up prices of lithium and the fluctuations that, obviously we're still waiting for maybe more signs of when this mine can actually restart. But how do you see that influencing the price of lithium moving forward?
I don't think it will influence the price as much as in the 2021, because now the penetration rate of the EV in China is over 50%. And the whole market is only 1. So you cannot double more than 50%. And when we saw the price go up, it's in the 2021, and the penetration rate is only 20%. It's a totally different story, but I will call the futures for the lithium carbonate when US or EU, the penetration rate go up, and I will call that.
Okay, you may. Thank you. EV and lithium-ion battery analyst at China Great Wall Securities. Just want to do a quick repack of some of the latest corporate stories out there of China as well. We're talking about rare earths. JL Mag Rare Earth reported that its first quarter profit more than doubled to over 200 million renminbi. Revenue for the third month period rose by 13%. Now, year-to-date net income increased approximately 160% year-on-year, reaching more than $500 million renminbi. China Mobile, meanwhile, announced that income for the 9 months ending in September rose by 4% to 115 million renminbi. Operating revenue remained flat at just under 800 billion yuan. Tech firm iFlyTech as well is saying its third quarter profit more than tripled to 172 million yuan. Revenue for the same period rose by 10%. The company specializes in speech intelligence and AI technology. We got plenty more ahead. This is Bloomberg.
Well, China's property sector might be in for more pain, with international investors looking to offset their holdings at steep losses. They've invested some $140 billion into Chinese commercial real estate over the last 15 years. But now a glut is causing rents to fall and many property values to slide. Office vacancies in major Chinese metropolitan cities are now among the world's highest. Let's get more on this now with our Asia Investing and Finance editor, Russell Ward, who joins us from Tokyo for more on today's Bloomberg Big Take. So, Russell, it's a really great piece and it really sets out in detail exactly where things have gone so wrong. But tell us about the commercial real estate slump in China and exactly how bad it is as well.
Morning, Annabelle. Yeah, I mean, in China, obviously the housing meltdown has been taking all the headlines. That's been very well documented in recent years in China. But perhaps what is less known is also a similar sort of boom and bust cycle that we've seen in the commercial real estate sector. So income and valuations on assets ranging from offices to warehouses to shopping malls and hotels have all plunged in recent years, and that's really bad news obviously for the foreign investors that have put in about $140 billion in this sector in the past 15 years, and it's also bad for the banks that have these assets as collateral. So now it's reaching the point where there seems to be sort of no end in sight, and so some of these investors are looking to sort of cash out and lick their wounds and realise some of these losses.
Yeah, certainly is licking wounds, as you say. So in terms of sectors, which have been some of the worst hit so far?
Yeah, perhaps the most surprising one is the office sector. Obviously worldwide during the pandemic, offices plunged in valuation because of the pandemic and because of the work from home trend. But it was surprising to find out that in China, office vacancies are among the highest in the world. Even in Shanghai, this financial hub there, vacancies are more than 20%. So we're just seeing this huge excess of supply that's going to take years to run through in the office sector, and that's resulting in a lot of pain for investors.
Yeah, there was a really great chart you had in the piece as well. Wuhan's office vacancy rate for 2024 at 43%. So who are the big investors that are getting stuck in these deals as well?
So the story highlights a few cases. One involves Oaktree. That's the famous distressed debt specialist that lent money to Evergrande before Evergrande defaulted. Then, of course, Evergrande defaulted on this loan. And so Oaktree has been saddled with this sprawling hotel and apartment complex and it's sort of unable to sell this or unwilling to sell this at this point. So it's sort of in some ways gotten into the construction industry, finishing a lot of these apartments and also getting into the hospitality industry by running these hotels that are seeing not that many tourists come through. So that was one example. Another example was Carlyle sold a office tower in Shanghai that it had spent years renovating at just over half the price. And then another example that we cite in the story involves BlackRock, which missed some loan payments on some office towers in Shanghai as well, and had to take equity losses on its ownership in that property. and then the banks that had extended the loan also couldn't recover the full value of the loan, so they booked losses on that as well. So those are just some examples that we cite in the story, and we're likely to see more to come.
Yeah, difficult market, of course, it seems. Russell, thank you for bringing us that big tape. Of course, you can read that piece today on China's property sector on the terminal. There's also on our website, Bloomberg.com. Plenty more ahead. This is Bloomberg.
Taking a look at markets this morning, we are seeing shares of Weimob here rising pretty significantly, but it's just announced that it's in business cooperation with Douyin, so China's version of TikTok, but essentially Weimob, a Chinese software as a service development provider. So that's that stock there. Also a trading debut for JST. This is another tech-focused company this morning, but has had a very strong start to the session there, gains of 20%. And it is that story around tech in general that's moving higher across the board, because we're taking a look at the likes of Bilibili, Sunny Optical, SMIC, Xpeng. I mean, some of this is down to the Apple story, of course, particularly names like Sunny Optical, the supply into it, because we saw Apple hitting a fresh record. It's actually its first fresh record for 2025.
Yep, and we're watching Vietnam markets. They open up in just a few minutes as well. What was a pretty brutal sell-off yesterday, right? Tumbled the most in 6 months. There was some renewed concerns about tighter scrutiny when it comes to corporate bond issuance, so some credit concerns there. So there is some concern maybe now that this could freeze credit and really weigh on growth for the country as well. So this is after they heard from regulators about this inspection of 67 bond issuers, which highlighted various violations. So that, really did sap investor sentiment here yesterday. We're down about 5% yesterday in the last 2 days or so. Much more in the next hour. You're watching The China Show. Welcome back to The China Show. Here's a look at the HSI a half hour into the session. It continues to be a good day if you're long this market. We're up 1.5% here right now. H shares are up about 150 points, and HS Tech is now in the green once again. So there you go. Another day of risk taking, really, when it comes to optimism around whether trade tensions and the like seems to be cooling down a bit. You also talk about everything rallying, right? When you talk about when Japan, Taiwan, Korea are reaching records, MXAP now is at those record levels as well. Yeah, fresh record for the MSCI Asia Pacific Index this morning. I think also the big story that's playing into it as well is the corporate earnings that we got in the US, because there was so much anticipation ahead of these numbers. If they weren't good, it was really going to be testing investor enthusiasm. But actually, out of the companies that have reported so far, 85% of them have surprised to the upside. So that does set a positive tone that, again, translates from Wall Street into the Asian session. Today, as you said, it's really that story around tech as well. You can see those tech-heavy gauges, the likes of the Kospi, for instance, Taiwan, but pushing to highs because we had Apple hitting a fresh record, its first for 2025. And the Nikkei as well, they're really the standout, but that's more of the political story as well, because you've got more clarity around Takaichi's path forward in the country. Yeah, and we're starting to get a little bit more, signs of what this cabinet is going to look like as well. We've been talking about Sasuke Katayama possibly being tapped as finance minister, so we'll get a little bit more clues on the next few hours or so of what this sort of government is going to look like under Takaichi. But that Takaichi trade seems to be underway here as well. Nikkei 225 up 1.5% here as well. But yes, it seems like at least Japan, that story is still continuing. You have the U.S. and China sort of negotiations and the like, and President Trump really kind of highlighting, I guess, listing out some of the issues that he wants to discuss with President Xi in the next meeting there in South Korea. So everything from rare earth, soybeans, fentanyl and the like, and really it's quite divisive issues, right? But then again, he's still thinking that things could be on track. Really, and that's enough for equity markets to continue to go higher. That's what they really seem to be clinging to, because even though he vowed that he would be looking at further tariffs or implementing further tariffs if there isn't a deal come November 1, traders do like this, what he also said over the weekend or going into the weekend, which was that
the current or the proposed higher tariffs rates are also unsustainable. So that recognition, I guess, coming from Washington as well. But let's get more on the market outlook. Bring in Bloomberg and Life strategist Mark Cranfield, who joins us now from Singapore. And Mark, what do you think is the biggest catalyst today? That those easing trade tensions, or what we're getting on the US earnings front? Of course, it can be both as well.
Yeah, all of the above, I would suggest. Even the prospect of an all-female team at the top of Japanese politics seems to be very well received by the Japanese equity market. You can see they're running into another very strong day today after a good one yesterday. So this potential combination of Takeichi and Katayama looks as though it's really captured the imagination of the Japanese investors and foreign investors as well, who've been piling money into Japan this month. The way they're going, it will be the best month of the year for inflows from foreign investors into Japan. Now, Katayama was involved in restructuring projects in the rest of Japan previously, so her combination with Takeichi could be very positive in terms of getting distribution of fiscal stimulus to the right parts of Japan, which has sometimes been a problem under previous administration. So that is very good. And at the same time, you're getting the spillover from all these Apple suppliers, which is helping to boost Korea, Taiwan, all the regional markets, which makes life very interesting from the point of view of some of the longer term threads that we've had, such as gold. And gold could start to get a lot more volatile now as we see this run in towards the end of the year, where equities may be in such a strong position globally that people can start to reconsider whether they really need as much gold as they have been recently.
Yeah, I mean, that sell-off on Friday was certainly a wake-up call, I think, for a lot of the gold traders and people out there. But it's interesting, right? It used to be gold having this negative correlation with risk assets, stocks in particular. It seems like that all has been vanished in the last few months or so, Mark. Does that make gold a bit more vulnerable if, in fact, we see signs of liquidity tightening?
Yeah, extremely vulnerable because of the positioning which has built up in the past few months. So we got into a situation where, in the minds of some investors, it's almost become a one-way trade. A little bit in parallel with the AI theme. People, every time there was anything to do with AI, people just jumped on to the latest narrative and they would buy equities related to that. Well, something similar has been going on with gold, with just more and more people piling in. Central banks started it, and now it's been spreading to other investors, institutional and retail investors as well. Bloomberg has plenty of stories with queues forming at gold shops all over Asia, whether it's in Australia, in Vietnam, in India. People literally want to buy as much gold as they can. And that's usually the story you get when you're near the top of a market, not at the bottom of the market. So clearly the whole idea that everybody should have some gold in their portfolio probably is coming near the end of it. And we're likely to get very volatile from here simply because positioning is so big. It's heavily skewed towards long positions in gold. All it will need is people thinking, well, if gold has done too much, we can start to switch some of our money into other assets, whether it's equities or bonds or other currencies. So we're likely to see much bigger intraday swings and people becoming a little bit more edgy at these kind of levels. And the kind of sell-off that we saw on Friday, we'll probably have to get used to it because we're going to see more days like that as we get closer, particularly towards the next FOMC decision, which looks as though it's going to be a rate cut. But whether that marks the end of the cycle or a continuation, gold investors will be very concerned about that.
Mark, the other theme we're tracking today is Australia and the US signing this deal for rare earth supplies. And you can see that immediate market impact in some of the Sydney-listed rare earth stocks. But is there a broader implication here that investors need to digest as well? And I'm thinking more about how the US is reducing its reliance on China too.
Certainly that will be taken at one level. The fact that Australia has signed this deal, obviously very positive for the Australian dollar as well. But when you think of it in relative terms to the amount of rare earths that China can supply to the global economy, it will take a very long time before Australia is able to match the kind of output that China can. So it's a very positive step, but it's something that will happen over a long period of time. It's not going to have an enormous short-term boost to markets. But certainly if the US can find other people like Australia to step in and take up some of the slack from China, that would be very significant.
Mark, thank you. Mark Cranfield there, I'm live strategist, joining us with the latest on what's moving markets here today. And we'll be live from Tokyo next as we focus on Japan. And Sanai Takaichi looks to be on track to become Japan's first female prime minister after coalition talks bear fruit. We'll also be getting market analysis from Wells Fargo. Next, this is Bloomberg. Japan's Sanai Takaichi is poised to become the nation's first female prime minister after a parliamentary vote later on today. Local media reports are coming in now, telegraphing the potential composition of the incoming cabinet. Let's bring in our Bloomberg economics and government reporter, Yoshiaki Nohara. Yoshi, give us an update. What we're hearing so far, what this cabinet might end up looking like.
Right. So as you mentioned that we are expected to have a first female prime minister, officially decided by Parliament today, and one key position that is expected to be filled is the finance ministry position, and we're hearing that from local media reports, the Satsuki Katayama is expected to fill that position. She's going to be the first female person to hold that powerful position, and that is going to be a really closely watch the position. But we don't know yet what specific policy agendas she's likely to set at this point.
So then, we don't know the policies, but we do know there are some urgent issues, of course, that are facing Takaichi. What are they exactly?
Well, number one priority for her is the inflation. She's vowed the pledged to do everything she can to ease the pain of inflation on the people. But here's what's interesting, that she's also, in a support of slow, at least a slow approach to the Bank of Japan's normalization policy. So that is, expected to put some strains on the fiscal spending side because she has to do more to, in terms of economic stimulus to ease the pain rather than counting on the higher interest rates by the central bank.
Yeah, and so in terms of what's next, what can we look out for?
Well, what's next is the mix of, a continuation of names being floating in the media reports, and also, which the other, key cabinet positions will be filled by whom. But also, you have to look beyond this week. That next week is full of diplomatic events. That President Trump is expected to visit Japan, and that was going to be the first meeting in person with between Takaichi and Trump. And Takaichi is expected to make a good impression to the president because everybody knows that the first meeting is kind of going to set a tone, and it's going to be important to have a positive chemistry going forward if Japan wants to secure, close ties over security and trade tensions and many other fronts.
Yoshi, thanks for joining us this morning. That was our Bloomberg economics and government reporter Yoshiaki Nohara there. And let's bring in Chidu Narayanan, head of APAC macro strategy at Wells Fargo. So Chidu, thanks very much for joining us in studio, and it's great to have you here from Singapore. But let's talk about the direction of the yen, because of course we initially saw quite a big reaction in it on the expectations you'd see the BOJ easing rather. But where do you think we go from here in the nearer term, because we still have a lot of things that aren't settled yet?
That's absolutely right. First things first, we've got some clarity on the near term on the government. We could possibly be seeing Takaichi-san be nominated as the Prime Minister, take over as well. That has assuaged some of the concerns for markets, which led to the bit of a yen rally. But near term, we do think that there is still political uncertainty. We don't. It's still a minority government. We still don't know what the policies are going to be like you just discussed. And all factors point towards potential fiscal stimulus, which, depending on the composition, might be good for growth, but it will still definitely weigh on the JGBs, which will then weigh on the yen as well.
She's known to be almost like a protege of Abe. Does it feel like this? We could get back to that sort of era once again in Japanese markets?
Right. That's been a question that we've got a lot over the last 2 weeks at least. a few differences. She is definitely cut from the same cloth, but the background is very different. When Abe took over first, dollar yen was trading much lower than where it is right now. So the impetus was for the three-pillar approach, the three arrows of Abe, which also included dollar yen substantially higher. Yeah. And you also had Kuroda-san as the BOJ governor, who was in line with that sort of thinking. Right now, you have much more pressure on JGBs. You don't have the same amount of fiscal space. And the yen's trading well north of 100, which is where it used to be. So I think near term, probably a little bit less of a wiggle room. Yeah. That being said, I still think that we could see a lot more fiscal easing coming from Japan. If you look at the upper house elections, that was the cornerstone of all of the opposition. That has been a key cornerstone for Takaichi-san as well, possibly why she won the LDP leadership, a change from what they've been doing recently. Yeah. And near term, that should be supportive for medium term supportive for growth, near term weighing on the JGBs and the yen.
What about the flip side of this, which is also the global story and the haven demand that we've seen for the yen as well?
I think that's very important. Probably that's what's keeping dollar yen at 150, 151. We expected dollar yen to be range bound between 152 to 155. Risks more skewed to the top side, purely from the Japanese political evolution. You've seen this the last week being a bit more of a classic risk-off scenario, which we've not seen in a little while. So it's sort of heartening to see that come back as well. We think that should keep the yen supported on the margin. That combined with the fact that if you look at positioning as well, you look at fast money positioning, hedge fund investor positioning, they are already short yen, mostly because it's a positive carry trade, and also because you can't keep waiting for the yen to be appreciating. So when that happens, they might turn around. But given the fairly extended short yen positioning, there might be limited yen downside, i.e. limited dollar yen topside.
Yeah. You mentioned about the JGB. The yield curve continues to flatten, and you're not seeing that much interest when it comes to the long end of this curve. And there's a lot of anticipation of the BOJ, whether they're going to hike this year as well. I mean, can we expect at least this kind of widowmaker trade to continue? That, short JGBs, is that going to be a still lucrative sort of strategy moving forward?
We are on that on that boat. We are bearish generally duration across the world, in the US, in the UK, in Japan. All places, all geographies do have significant fiscal stresses, very limited fiscal space. And this year, the theme that we've seen is countries in general are very comfortable to increase fiscal expansion. That was a theme right after COVID. The comfort with running much larger fiscal deficits has increased over the last 4-5 years, especially so this year, particularly countries which have had much smaller defense budgets, and the focus has been on increasing defense budgets. Now that's not going to be coming at the expense of something else. So you're going to have increased fiscal spending and an increased defense budget, which will put pressure on the long end of the curve. So we do think that the 30-year, 40-year part of the curve in Japan, across the world, will be under pressure, yields to the top side.
Yeah, and you see that pressure being very acute in the US as well. So what does that mean around general demand that you see for the dollar and that de-dollarization theme as well that's been very closely watched this year?
That's fair. I think so. We started getting these questions maybe 10 years back, 2016, 2017, and I think from Q2 towards the most part of Q2, that was the most common question that I received from clients. To unpack that a little bit. Has there been a bit of diversification away from dollar assets? Absolutely. But that's coming from a background of 10 years of building up significant dollar positions. Dollar assets have been significantly outperforming everybody else, driven by the theme of US exceptionalism, significant rate differentials, and so on. So there's a bit of diversification. Is that complete run away from dollar assets? Not really. Yeah. Dollar debt market, dollar equity market, still by far the most liquid markets in the world. So there will be a definite position in portfolios for dollar assets. That being said, we do see dollar generally being weaker, not because of deallocation from dollars, but because of political uncertainty, policy uncertainty, all of that increasing the dollar risk premium, weighing on the dollar, but marginally, not a collapse of the dollar, definitely.
Yeah, especially given it seems like the weakness has stalled a bit after that 10% decline in the dollar in the first half. In terms of how we can trade the dollar then moving forward in the near term. How do you continue to fade, I guess, dollar weakness, right, or dollar strength? Is it still through G10? Do I look at EM? What's the best way?
In the near term, we are a little bit bullish on the dollar. Maybe not a dramatic ramp up in dollars, but dollar strength continuing. We would like to do that more against risk, political risk expression. So Japanese yen, euro, particularly the sterling, and we would avoid currencies like the Aussie, which we think is already quite cheap. It's already well positioned against the dollar. We would fade Aussie strength against maybe the likes of the yen, against the likes of the Kiwi. Dollar CNH is not a trade that we would like to use dollar strength to express dollar strength. We think dollar CNH will continue to remain around current levels, probably edge down a little lower, aided by the PBOC.
Yeah, on that, then, so 710, of course, is the line we've sort of seen in terms of the fix. So is that where we trend again into the year end?
Yes, our forecast is for dollar CNH to head to 710 by the end of the year, early 7s, 705, 707 sort of levels in early 2026. Aided by the PBOC fix. We think the PBOC fix has been edging lower, and typically the PBOC fixing error has a high correlation to the strength of the dollar. That has broken down a couple of times this year. When the dollar has been weaker, the fixing error has still been strong. And if you look at when that happened, that was during periods of elevated US-China tensions. We're seeing that again, which then means that we believe policymakers do not want the focus to be detracted on the FX away from the political issues, away from the negotiations. Yeah. So keep CNY strong, keep the fixing error high, and keep dollar CNY fixing low.
Chidu, thank you so much for joining us. Chidu Narayanan, their head of macro strategy for APAC at Wells Fargo. We're checking Vietnam markets now, just opening up in the last few minutes or so. After what was that 5% drop yesterday, looks like we're seeing a little bit of a recovery there. Obviously, concerns about corporate bond issuance and the like really did weigh on risk sentiment yesterday here, but today looking a little bit better. Plenty more ahead. This is Bloomberg. In some corporate news this morning, major Japanese retailers, including Muji owner Ryohan Kakao, suspended their e-commerce sites after a cyber attack on a key supplier. The disruption stemmed from a ransomware attack on Sunday that crippled the systems of office supply seller Ascol. Its shares fell 5% on Monday. It's the second such incident to unsettle Japan's consumer market in less than a month. Amazon Web Services, the world's largest cloud provider, says operations are back to normal after a widespread outage that hit a broad spectrum of customers for around 15 hours. The episode disrupted hundreds of websites and apps, including the likes of Venmo, Robinhood, and Apple TV. The outage was caused by a database network issue and highlights how much of the internet is dependent on the operations of one single company. And Apple shares hit their first record this year after Loop Capital upgraded the stock to buy from hold, citing positive iPhone demand trends. Shares rose around 4%, surpassing an all-time high that had stood since December. And the recent strength comes amid signs a long-awaited iPhone upgrade cycle may be underway.
Yeah, and that's really the big story, I think, for markets as well in Asia today, because we're seeing a lot of those Apple suppliers moving high. I mean, yeah, this is the iPhone 17, and it does seem like, in terms of the data that's being released so far, this is from Counterpoint, of course, not from us, but it is looking at the first 10 days of sales for the US and China. You compare that back to what the iPhone 16 saw, and you're looking at 14% better sales for the iPhone 17 so far.
Yeah, so certainly you're seeing a bit of a catch-up, I guess, when it comes to Apple. The suppliers actually have sort of rallied even just ahead of that, really what we've been hearing so far, the chatter about iPhone 17 sales as well. So we've been waiting for this upgrade cycle for some time now. But there is a lot of questions, right? 32 times earnings. That's above the 10-year average. It's actually one of the most expensive members of the Mac 7 here right now. So does this sort of iPhone optimism justify this sort of valuation? I think there's still a bit of a debate around that, Belle.
Yeah, and actually Apple's a lot less loved than the other mega caps, save for Tesla. But a lot of the analysts tracked still, I mean, you've got 60% holding a buy rating, but still in terms of ones that have got a hold or a sell, that's the lowest that you see bar from Tesla. But yeah, iPhone 17. I mean, are you someone that refreshes every year?
No. I'm still like 14 Pro Max,
guys. Okay, I'm on the base model of the 14, so that I think that tells you all you need to know.
Maybe we're due for an upgrade, though.
I'm holding out for next year when they refresh the entire lineup. But anyway, we'll leave that there for Apple in terms of the market check today as well. So yes, you've got the tech theme that plays into it, but also there's been some more optimism around signs of maybe that US-China tensions could be easing somewhat. Stocks to watch as well. BHP is moving to the upside here, some 2.5%. The story here is that they've boosted output of copper in the first quarter, and production is essentially rising to a ramp up of one of their projects in Chile. That is BHP. Let's also take a look at Mandarin Oriental today, because this is down to, I mean, it's the biggest jump we've seen for the company in 35 years, but there's been a deal with Jardine Matheson Holdings.
Yeah, so they are looking to buy the remaining close to 12% of the hotel the company doesn't already own. So there you go. Record high for the stock here right now. And we're tracking Bitcoin as well, right? Just given that we are seeing this everything rally. Well, right now it seems like Bitcoin is going and bucking that trend here. We're dropping below the 110,000 level for the cryptocurrency here right now.
Yeah, absolutely. It's been one of the best performing risk assets this year, but 110,000 has been one of the key lines that we've been tracking. So below that right now, but we'll have plenty more ahead. This is Bloomberg.
11:29 a.m. in Tokyo. Japanese markets are going to that lunch break, and it looks to be a good sort of day here for Japanese assets. We're up another 1.5%. That Takeichi trade certainly going for another day here. And as we start to hear the LDP and the Ishin ink some sort of coalition deal to set up her as the next PM. So certainly that's going to be the one thing to watch, and really what her cabinet looks like when it comes to the finance minister and the like. So we're going to get a little bit more details, but local media are reporting some indications of what it could look like as well. But yes, there you go. Dollar yen sees some weakness there. We're at 151 levels this morning, Belle.
Yeah, and also just taking a look across the broader markets today, because it's pretty much risk on across the board. We did have a strong session on Wall Street overnight, so you had a few different themes playing into this. Signs of easing trade tensions, for instance, between the US and China, or at least investors interpreting or clinging to any signs of easing tensions. US corporate earnings as well continuing to be robust, plus Apple hitting a fresh record. So you can see the tech sector there, one of the standouts, but lots of gains really across the board today. US dollar as well, I mean, that's fairly steady right now, but something, of course, any dollar weakness we get can be supportive for Asian equities.
Yeah, and when it comes to China, right, all that buzz and hype was around the whole AI trade and the like, but really recently we started to see a bit of rotation, right? In fact, when you have trade tensions, it's really kind of fueling a lot of uncertainty out there. Investors are tilting more now to more the dividend plays once again in China. In fact, the CSI 300 dividend index last week really posted the strongest outperformance against the onshore benchmark in nearly 4 years. For more, let's bring in Winnie, our Asia equities reporter. She joins us now. Tell us what's really driving this sort of dividend trade once again.
Yeah, it's quite an interesting shift, right? We had this very strong tech rally earlier the year, and then now investors are looking to pivot their money away from tech stocks and more into these defensive plays. And yes, it's being driven by this overall kind of risk-off sentiment when it comes to the ongoing U.S.-China tensions. But also timing-wise, it's quite interesting. We talked about like taking profit off that tech share rally, but also with the fourth plenum right now, we are expecting maybe potentially some fresh stimulus, but probably not as much. And also with these meetings coming up between U.S. and China, whether it's in Malaysia or at the APEC summit in South Korea. So it's kind of really lots of volatility and risk ahead, lots of uncertainty, and hence we're seeing that move in Chinese stocks recently.
From an analyst perspective, it's interesting because we had Winnie on before from BofA talking about how they're saying stay risk on into year end. It's not the same call though we're getting from others.
Yeah, exactly. I actually find that very interesting because when we actually talked or heard from Morgan Stanley, for example, they were saying that they do not recommend buying the dip right now for Chinese stocks, and that they also prefer A shares over H shares if this U.S.-China tension is likely going to extend into November. And similarly, yesterday we saw that note from Nomura also recommending that that we still not chase this risk-on rally because they expect expect the U.S.-China tensions to continue to be that overhang for Chinese stocks in the near term, and that they also suggest that buying into defensive stocks for now if we are going to see a bit more escalation for U.S.-China tensions.
All right, that's the big question. That's Winnie there, Bloomberg Asia equities reporter, and of course sticking on trade tensions as we look ahead to next week's likely meeting between President Trump and his Chinese counterpart Xi Jinping. The US leader is expressing optimism for a potential trade deal with Beijing.
I expect we'll probably work out a very fair deal with President Xi of China. So most of you will be with us. It's going to be very exciting. And I think we're going to work out something that's good for both countries.
Let's bring in our Bloomberg opinion columnist, Karishma Vashwani, she thinks that Beijing's trade war tactics are a way to test what Washington values most in these negotiations. Karishma joins us now. Karishma, it's good to see you. Tell us what's the message Beijing is trying to send here.
Yeah, Yvonne, I think the message was pretty clear. It's basically China saying to the United States that we aren't afraid to play hardball as a result of the trade negotiations that they're in. Now, you'll remember, of course, after the Madrid talks, there was a sense of a rapprochement between the two sides. And I remember coming onto your program and saying to you, don't see this as a truce or as a reset. It's simply a pause before further hostilities. And that's basically what we've seen in the last week, right? I mean, we've seen these restrictions that China has said it's going to impose on rare earths, a huge and critical aspect of the semiconductor supply chain. The United States getting very upset with that, threatening further tariffs, and now a climb down in some respects from President Trump ahead of that key meeting, the meeting between him and Xi Jinping that he is very obviously keen to have. And I think that's something that the Chinese understand implicitly. They feel that in some respects they are holding some of the cards in this negotiation, and they're not afraid to use it. We've heard from the Chinese Foreign Ministry saying that they don't want a trade war, but they're not afraid of one either. And I think that's the main message and signal that is being sent by Beijing to the United States ahead of this key meeting.
Taking such a hardball approach can be risky. What's the odds here that we see it backfiring, do you think?
Well, it's hit and miss, Annabelle, I think would be fair to say. The relationship between these two is so volatile, right? But the trajectory is pretty clear. You have, on the one hand, the United States saying that it's not going to capitulate. On the other hand, you have China saying that, look, we're an equal partner in these negotiations. And I think consistently what I hear from folks in Beijing is it's about that sense of agency and the sense of equality, that two of these massive superpowers coming together, having these sorts of discussions, it needs to be on a sort of even keel and have sort of fair play on both sides. And the risk of playing hardball in this way definitely had the possibility of backfiring. But as we've heard from President Trump, that's not been the case, despite all the angry rhetoric. We heard from Scott Bessent as well in the lead up to these trips that President Trump is making to the region. And ultimately, I think the test will be if we see this meeting taking place between Xi Jinping and President Trump, and my sense is it will definitely go ahead. And he's already talked about the kinds of things that will be on the table. And one of the key red lines for China, which is Taiwan, is something that President Trump has brought up as the possibility of what will be on the negotiating table when and if they meet next week.
Yeah, we heard that in that interview overnight. It seems like you think this way. Beijing is stress testing Washington's resolve not just on trade, but also on Taiwan. Is Taiwan a vital American interest that needs to be defended? Or do you think this is all just kind of bargaining chips right now?
That's an excellent way to frame it, Yvonne. And I think that it's the latter, because what Xi Jinping is looking to do, I think, is to get a sense of what the United States might do if it really came push came to shove, right? He's not made any, he's made it very abundantly clear, I should say, that Taiwan is a red line for China, that it is a part of China that it sees as its own territory, despite being the self-governed, democratically run island, and that at some point in the future, the plan is to unify with it, either through peaceful means or by force. This is not something that China has hidden. And it's something that the United States has been also skirting around, not just in this administration, but in previous administrations. And it isn't entirely clear what Donald Trump would do when it comes to defending Taiwan. And it will be interesting to see exactly what kind of conversation the two sides have about Taiwan. I imagine the government in Taipei very nervous and apprehensive about that meeting, if and again when it does happen. But I think this is China's way of trying to figure out, look, if we push you on rare earths, if we push you on all these various aspects of the trade war, how might you respond when it comes to something we really care about? And it's all about ratcheting up the tension ahead of the negotiation. And to be fair, China thinks not in election cycles, it thinks in decades, as we've seen, just as a result of the key meetings that are happening this week at the plenum. And it has time on its side. And yes, the economy is in a painful position, and it certainly has seen the impact from the trade war, but politically, it can withstand a lot of this economic pain. And I think that's what Xi Jinping and the Communist Party is betting on.
That was our Bloomberg opinion columnist, Karishma Vashwani, there in Singapore. And you can read Karishma's full piece on China testing US resolve on tariffs on the terminal. It's also available on Bloomberg.com. We've also had some breaking news crossing the terminal in the last few minutes. The Kakao founder, this is Brian Kim, has been acquitted in a stock manipulation trial over in Seoul. So this was regarded really as a watershed case for China's, or South Korea's rather, internet industry. But Brian Kim, he had been battling charges that he tried to manipulate one of the country's biggest media sector deals. That was the acquisition of K-pop studio SM Entertainment back in 2023. And Kim was allegedly involved with an attempt to buy and push the SM stock above a rival offer of 120,000 won that came from the BTS agency Hybe. But just to reiterate, the Kakao founder, Brian Kim, has been acquitted in that stock manipulation case. And you're seeing Kakao Corp, they're extending gains off the back. So we'll have more details on that ahead. This is Bloomberg. Taking a look at what's happening with the HS Tech intraday, Hang Seng Tech Index, of course. We're seeing very solid gains. It's been really interesting because this morning we've been discussing about that rotation we were seeing into the dividend stocks. It seems like maybe with these easing China-US trade tensions, there's that reason to go back into tech stocks as well. Not least, of course, you've got the Apple story and you've seen strong sales. The AI theme continues to be intact. We've got solid corporate earnings as well across the US. But we are seeing pretty much every single member of the Hang Seng Tech gauge in the green today.
Yeah, and we're seeing another 3% gains for HS Tech that we saw similar gains already yesterday. So that continues on, this AI tech trade. You take a look at how the tech trade filters through to the likes of South Korea, and you see another record run when it comes to the Kospi here, right? So we are now rising for a fifth day. So another record high for the Kospi here today. We had pretty strong trade data that came out for the first 20 days of the year, the month, I should say. There's also this whole dividend tax hope as well. So there's a lot of optimism about lower dividend-related tax rates as well. So we're already talking about the explosive growth that we've seen, 62% so far this year for the Kospi. And we got to talk about what's been going on the retail side of things, right? Because retail investors have certainly been a key driver in a lot of the gains that we're seeing in this market. And you see the likes of SK Hynix, Samsung Electronics, HD Hyundai Heavy are among some of the biggest boosts to the gauge overall. So all-time highs when it comes to Korea, and we've got to talk about these ants. Right, Bella?
I love this.
That's what they call them, ants, the retail investors in South Korea. They're really driving this sort of record shift into funds, into investment accounts with a growing appetite for returns and risk. But such risk-taking activity is straining the financial system and threatening broader economic stability as well. Let's bring in Sang-Mi Cha, our Asia equities reporter. She's with us right now to tell us a little bit about these dynamics in this market, right? What do you think changed among retail investors, and how much bolder are they really getting now?
Yeah, Yvonne, the risk-taking activity of South Koreans is really not new. I mean, the Netflix series Squid Game tells us all about that. But it's just what's new is that it's become a lot more serious. It's exacerbating a little more. And all of this, we can see that in the data. We see the margin loans tripling over the past 5 years. We see record number nearing towards opening of these investment accounts as Kospi is running towards that bull. And we see a lot of people just piling into these leveraged and inverse ETFs. We're talking about triple or just 3 times the gains that they're looking for here. And all of this is quite different, a stark contrast to what we're seeing outside the world. And we're seeing this especially because there has been this cap, a hard cap on mortgage loan from the government, and that is making it even more difficult for Koreans to purchase homes in Seoul, in Korea overall. And this is just making them go and pursue some of the other ways of high risk and high yield investment themes. And this is creating other problems as well.
Yeah, let's talk through those problems, because I think exactly it's what's driving the retailers, investors' risky-taking behaviour is that desperate desire to get into the property market. But what are the ramifications of that?
You're exactly right. So we've talked to these individuals, the actual risk takers who we interviewed, and we've talked to the psychologists and academics. It all just comes down to one purpose: amassing enough wealth to purchase a home in Korea. And the best, if you do it in glitzy Gangnam district, where you can see you oversee, the Han River view there. But again, this means that the sky-high competition and this housing market is becoming a bit of that competition and just like a strain on the individuals. It's a psychology matter. But at the same time, this is putting a strain on the financial stability, right? Because if the bubble bursts, then this would lead to credit issues for the individuals, and ultimately it will have an effect on the national economy. So there are a lot of these corners of risky investments that we're seeing, and the regulators are growing concerned about this. Just recently, we were able to see the wipeout in crypto, and this is a sector that we can actually see some of those moves. Koreans have this preference in altcoins, or the so-called small cap, smaller cryptocurrencies. And actually the altcoin trading accounts for 80% of the Korean crypto exchanges. That's a stark contrast to other parts of the world where Ether and Bitcoin accounts for more than 50%. So you can see in a bull market, it could have a good upside. Maybe someone could have bought an apartment, but in a bear market, it would also have the same effect.
That was our Bloomberg Asia Equities reporter, Sang-Mi Cha, there in Singapore, talking about this story around ants over in Seoul. But also an alert for you this morning. We have Haier that's said to be weighing an IPO of its IoT or Internet of Things unit, that's Cosmoplat. More IPO news and looking at raising about $500 million from that listing if it were to take place. So what we're hearing is that Haier is working with CICC, also HSBC, on a potential share sale. And what we're hearing again from sources is that it could take place next year. But of course, those considerations are ongoing, and details about the size and the timing could change as well. But we'll get more details on that ahead. Also looking at what's happening with AWS.
Yeah, certainly there's been a lot of talk here this morning. The world's largest cloud provider saying the operations are back to normal here after we saw the disruptions here, right? This widespread outage that hit a broad spectrum of customers for around 15 hours. The outage also highlighted the importance of managing cybersecurity, including customer identification. That's according to user management software company Okta, whose CEO, Todd McKinnon, spoke to us a bit earlier on.
I think about the world as layered into different critical services. Cloud infrastructure is one critical service. And as the leading independent neutral identity company, we're building this identity service for the entire world, whether that's enterprises, whether that's consumers, whether that's people building AI agents. We want to be that identity infrastructure. It's important for cybersecurity, it's important for business continuity, and it has to be reliable.
So how do you make sure that it's reliable then?
A lot of redundancy and a lot of focus and a lot of making sure we do exactly what customers expect, whether it's backups, redundancy, and monitoring it continuously. It's very important for us.
Now, you are growing very, very substantially. What, you have 800 people in San Francisco and how many thousand around the world?
6,000 global employees doing a great job for our customers every day.
Well, love to hear it, and I hope they are. How fast are you adding customers, and what's your pitch versus another identity security company?
Yeah, it's an interesting perspective we have, and there's different perspectives on some vendors want to sell you everything across the entire application and platform stack. Some vendors want to sell you everything across cybersecurity. We focus on identity, and we focus on verifying who the people are in your company, who the people are coming to your website as customers or prospects. And now, really, with AI agents, we make sure that that identity service is continuous across everything you're trying to automate in your business with AI, too. And that's our focus. And beyond that, we focus on connecting to everything else in the technology stack and letting our customers choose what they want to use.
What is the scale of AI agents Okta expects in the next 12 months?
It's starting out very strong, but it's going to be growing significantly. When you think about what companies can automate with these AI agents, how they can improve their top-line revenue, how they can cut costs, how they can be more efficient, how they can serve their customers better, it's got tremendous potential.
What about your exposure to ChatGPT user growth? How much of that do you have, and how is it changing how you do business?
Well, I think ChatGPT is the perfect example of how much can be automated with AI. And when every company looks at that, they think, hey, we can make our customer experience better with adding ChatGPT-like capabilities. We can make our employees more productive. So it's really driving them to deploy more AI technology. And that means more identity is required. Those connections have to be secure. Those connections have to be reliable. So it's really an exciting time for the industry.
That was the Okta CEO, Tom McKinnon, there speaking with her colleague, Bonnie Quinn. We got plenty more ahead. This is Bloomberg. All right, back to our scoop here this morning that we just broke. Bloomberg has learned that appliance maker Haier Smart Home is considering an IPO of its Internet of Things unit, Cosmoplat. For more, let's bring in Bloomberg's Manuel Balgori, who leads our Asia-Pacific deals coverage. So what do we know at this point, and why do we think Haier is doing this?
Yvonne, another IPO in Hong Kong. It's just like keeping us so busy. Equity capital market transactions just booming here in the city. Listen, Haier, what a group. Who doesn't own an appliance by Haier, right? It's just like they do everything everywhere. So here we go with the Internet of Things, this catchy phrase that touches on various things and across industries, really, how to connect all the different things that we have in the house via Internet, right? And control it in your iPad or in your phone. So they've got this business which they've been creating and building over the years. And it's a good way for the group to maximize and put value on this business that was hidden somewhere in the group. I mean, Haier touches on so many things. It's a big conglomerate. The shares of the group haven't been performing that well this year. So it's perhaps a way for the group to raise some cash and put, some dollar amount into this company.
And what do we know in terms of the size of it and then who's underwriting it? What have we learned on that front?
Annabelle, so it's very early stage. It's looking more likely of a 2026 IPO to take place here in Hong Kong. They've appointed two sponsors, CICC and HSBC. They may add other banks. I haven't seen any IPO, but it's still a little bit early stage. Size-wise, roughly speaking, we're looking around $500 million, but I think timing, size, and other details are subject to change as the deal proceeds.
Manuel, great to have you, and another great scoop as well from your team. As you said, a very, very busy year for listings in Hong Kong. That was Bloomberg's Manuel Balgori there, who leads our Asia-Pacific deals coverage. And a quick market check here to break, taking a look at the Hang Seng, how it's performing so far. We're about nearly 90 minutes into trade and really seeing some strong gains being led by the tech sector in particular. We're talking before the Hang Seng tech gauge, nearly 3% to the upside. Also keeping a watch there on the offshore Chinese yuan after we had the fixing as well onshore, but back down around that 710 level.
Yeah, so it is hitting records here when you take a look at Asia Pacific as well. That gauge also seeing record highs here, really helped the likes of Japan, Taiwan, Korea. Hong Kong certainly is lifting its weight here this morning as well. That's it for us here on the China Show. See you tomorrow.